Going to go and have a look at the D's tomorrow night. Pretty excited about that. Even more excited the fact that I'm not watching the Swans. We'll see what happens in a fortnight. Hello, everyone. My name is Simon Thompson. I'm the editor of Startup Daily, your moderator, not moderator, MC. We've got a moderator over here in dazzling Darren Tran for our next panel. Now, I do want to ask, I don't know how these panels come together in terms of topics and everything, but how fintechs and traditional financial services collaborate to revolutionise the customer loan journey sounds like it must have been a really interesting meeting putting that one together. I know you guys are going to make this a fascinating conversation. And to do that, we've got Jordan Harris from Experian. We've got Sean Lorden from Nano Home Loans. Mate, I'm going to ask you a question this time around about what you're up to in strategy after that last panel. And Natalie Moss from Bendigo Bank. Our moderator, as I said, is Darren Dazzling Tran from Money Place. Ladies and gentlemen, hoop, holler, yell, scream, go berserk for our panel on revolutionising the customer loan journey. Come on, let's hear it.
Oh man, I don't know if I could keep up with that energy.
Bring it on. Get the chocolate.
I mean, he's done my job for me. I don't think I could do a better introduction, so I'm just going to scrap all the nice things I was going to say about you guys. But yes, we are talking about collaboration and how, between traditional financial services as well as fintechs on how, basically we're revolutionizing the customer loan journey or the customer experience, I think the cool kids say. But there's a lot to talk about. We've got a wealth of knowledge here. We've got some veterans of the industry, so we're going to jump straight into it. Sounds good? Good?
Sounds good.
All right, so Natalie, I'm going to pick
Hello.
on you first because let's face it, Bendigo Adelaide Bank, you guys have you're proud, traditional community bank. You've gone as far as saying there is no alternative to face-to-face personalized services. But at the same time, we can't ignore the fact that you are a success story when it comes to that kind of collaboration between, the incumbent traditionals as well as the fintech services. Who, let's face it, it's just, they're gunning towards automation, data services, quick to decisioning, completely online, completely digital. And then, we know the amount of work that you guys have done. Like you've done epic work with Up, you've done great work with TikTok, not the social
They're here
media.
today, so
Yeah.
I hope they're happy to hear it.
Yeah, but not or on one of the mortgage lenders, not the social media services. So no Bendigo TikTok dances, but I'm keen to understand, like, given that you have this emphasis on like face-to-face personalized lending, like has this collaboration helped, I guess like augment and enhance that kind of service that you guys provide in terms of your customer loan journey, or has it kind of detracted from it?
I think it's definitely enhanced. If you look at the community bank model, which is very much, that's the core value. It's a really core value for Bendigo Adelaide Bank, which is caring about the customer and their community. So Bendigo is about a physical community, and then you've got Up, which has really created this virtual community. So that actual same core value is at the heart of both businesses. It's saying the customer is really important and the community that they're part of is really important. I think that where the collaboration with fintechs has really helped us on the Bendigo side is that we talk about now being human by design or digital by design and human where it matters. So we want to automate as many things and make it seamless for the customer to work with us to do whatever they want to do. And that's where the fintechs are helping us. But we want to still keep that community connection and caring about the customer. So the human where it matters is when you want to jump out and you want to talk to a real person, when you're a little bit anxious because it's your first ever home loan, or you've got something serious that you need to deal with, like a deceased estate, you want to be able to jump out at that point. So we want to make it seamless. So if you don't want to deal with us and it's all transactional and easy, we want to make that seamless, but we want to be there for you if you want to jump out.
And you guys want to weigh in?
Yeah, look, I think the relationship that you guys have got with TikTok and Up has been amazing to watch. I'm particularly interested in seeing Up's home loan journey come to life and how that's going to help a lot of first-time home buyers, etc. So yeah, I don't know if you've got anything
Yeah.
that you could share with
So
everyone on
the
that.
lovely thing about the Up Home Loan is it's actually a three-way collaboration across the three organisations. So it's an Up Home Loan offering. It's backed by Bendigo Bank. It's got Bendigo backend, but you've got TikTok helping with the origination process. So that collaboration has allowed us to get that to market really quickly, and the TikTok guys have done a fantastic job collaborating with both our Up teams and our Bendigo teams. So that one has allowed all three to work together, which has been quite special. Yeah.
I mean, it couldn't have been all smooth sailings. I mean, with all the budding fintechs out here that want to, collaborate, like say with Bendigo Adelaide Bank, what are the kind of key learnings? What are the challenges, or any tips that you could share?
I think probably some of the key learnings around partnership needs to be equal. So it has to be beneficial to both sides, and maintaining that, and maintaining the customer at the centre of that. I think as a bank, I want the fintech. So I'll talk as if I'm the customer for a moment. If as a bank, I want the fintech to provide me with something that's really easy to use, available quickly, and doesn't lock me in to be entangled with that vendor with a monolithic product for 10 years. I want to be able to buy that one little thing, that one service that the fintech's really great at. That's the thing I want to be able to do. And I guess that's where working with Jordan and the team at Experian, the Look Who's Charging example is a really good one. There was one service that they offered that was suited a particular need. I rang them up on the Thursday. By the Friday, they gave us keys to their sandbox, and it took 10 minutes for our team to verify that that service was what I wanted. But they didn't lock me in for 10 years to a contract. They didn't make me buy 50 other products within a monolith. I could just buy that one. And you know, if their one isn't the best in another year or so, I'll just pluck it out and put something else in. So I think what I really want from fintechs and what works well is have something that's available now that I can use that isn't vaporware, and don't lock me in.
Yeah, that whole primary model's dead, right? It's all plug and play. If you've got the best data assets or best services, that's what people are going to use, right? Sean, I think this leads in perfectly to my next question. I actually had a really nice question to ask you, but I heard that the previous session you threw a curly one at the panel. So
Bring it on.
I'm going to just, it's karma. I'm going to pay it back. So, Nano, relatively new entrance into the market, but you, Sean, you're an OG. You've actually been around for quite some time, like working directly in the fintech sector.
Yeah.
So here's my question, and I kind of think keep this in mind. So it's been a recent shake-up within the sector. We've got some well-publicized, I guess, collapses of some of the neobanks, a lot of shedding of staff with, very promising, fintech lenders and other non-bank lenders, and a lot of consolidation. So keeping that all in mind, thinking back to when you initially kicked off your journey within the fintech sector versus now, and now like basically a budding fintech lender provider. So what do you think is different collaborating with the traditionals maybe 5 years ago to now?
Oh, look, I think it's definitely got the expectations have definitely gone up, particularly in this tough market that we're in, where there's a lot of economic uncertainty. Cap raises are a lot harder for fintechs. Just talking out there with pretty much everyone that's raising money at the moment. There's a lot of people going around, as they say, shaking hands and kissing babies just to try and to keep the lights on. So, and that when you're entering into a partnership as a fintech with a traditional, there's obviously expectation that your business model is strong, you've got a good capital base, and that you're going to be around to be able to service what your capabilities are that you're promising. So I definitely think it's got a lot more scrutinous. But then on the flip side to that, fintech has matured, right? So if you go back to 2017, so I started off life as one of the founding members of Volt. So we all, don't know if we all know, but Volt went through a pretty tough time recently, and that's still all playing out. But it's definitely gone the maturity levels that traditionals and fintechs have experienced with working with each other over the last 5 years actually means that there's more precedent for traditionals to work with fintechs. So, you talk about contracts, you talk about all the legals, the boring stuff that no one sees that doesn't exist in any of the press releases. There's a positive in that regard that people are able to partner with people more easily.
You guys agree?
I was going to say, I think one of the things that we've seen from the fintechs over the last few years that we've been dealing with has been they've really rapidly come up that maturity curve in regards to how they talk to the more traditional players. So being able to have those conversations about what's a DR plan, what's the BCP, and all those sort of really fundamental building blocks that traditionals need to see to work with the fintechs. I feel like the fintechs have really grabbed that in the last few years, and that's been a bit of a boring behind the scenes sort of piece that's accelerated a lot of the collaboration.
Yeah, absolutely. Look, I think I think the other point to add, the challenge that a lot of fintechs are going through dealing with the incumbents and the traditionals is getting the sales cycle right. So from our perspective, the home loan origination technology that we're selling into different banks and lenders at the moment, we go and speak to many lenders and many banks, and for that particular bit of technology, you don't know where they are in their journey in terms of looking to buy or build. But you still have to take part in the process of demoing. And one thing that's been really powerful for us is having the Nano Home Loans brand live with our technology. So whenever we're going in and we're showing our lending origination tech, we can actually put a live customer through, and we can show how it flows through in the back end. How that's going to make a lot of people's lives more easier at the traditionals, and it's going to ultimately faster time to yes, better unit economics, and better customer experience, which is kind of the holy trinity, right? And just one point to add, I think the biggest differentiator is that you can actually, you talk about the sandbox with Experian in 10 minutes. We delivered a core origination piece of technology for AMP in 115 days. Now, that's pretty quick, and we're only going to get faster the next time we do it. So, yeah, I think that fast and flexible implementation is also really important.
Apparently, there's another big unknown bank that you're about to roll out with. Could you drop the news here, or is this got a big exclusive from Nano?
That is top secret still, unfortunately. Yeah. That's APRA's fault, guys. So apologies.
All right, Jordan, I haven't forgotten about you. I actually kind of kept you last because I think you've kind of got a unique position in terms of this panel because, obviously Experian, look who's charging you guys. You've got a long history of dealing with a lot of the incumbent, the traditionals, but also obviously a big play into the fintech sector nowadays. I mean, obviously the acquisition of look who's charging. I mean, we do a lot of work with you at Moneyplace, and a lot of investment in that sector. So I mean, I guess kind of really taking advantage of that vantage point. Like, what do you see? What are the key differences when you're dealing with, say, when you're collaborating with fintechs, and when you're collaborating with, say, the big traditional incumbents?
Yeah, I suppose there's a couple of really interesting differences, and probably some of them sound a little obvious at the surface, but when you think about speed, so you talk about engaging through a sales cycle, making a buying decision, contracting, delivering, doing the project. We see the fintechs, not surprisingly, move a lot quicker, generally speaking, than the traditional players. And oftentimes that's not because the team we're dealing with isn't motivated or isn't running at pace. It's about organizational focus. So for the fintechs, the whole organizations are often really focused behind a singular goal. Sean and the team were standing up a digital mortgage lending platform. That was what they were doing. That's what the whole company was doing. Oftentimes with the incumbents or the more traditional players, we've got a really focused team we're dealing with, but they're facing into, on their side, oftentimes shared services who are supporting 7, 8, 9, 10 really focused teams running at their 7, 8, 9, 10 really important focused things. So that's where we see some of those differences in speed. I think the other difference is This is more from a vendor sort of perspective, but it's about certainty. So when we deal with a really large established player who's got an established business with consistent recurring profit that's quite stable, profitable, we sign a 3 or 4 year agreement with them. We're really certain that's going to come through. We're really certain we need to do what we need to do, but we're really certain if we do that they'll still be there in 3 years and the bills will be paid. For the fintechs, in many cases for them, we're dealing with companies who are pre-product, pre-revenue, pre-customer one. That doesn't mean we don't work with them. We absolutely do, but it means the way we approach and deal with them is just a little bit different. We focus a little bit more on shorter-term goals and shorter-term deliveries, and we try and avoid sort of getting ahead of the revenue too much, I suppose, in regards to how much we're sort of building and delivering. I think if I think about those differences and how the two different groups can work a bit better together, I think for me, the partnerships I've seen work really well are where both parties are really humble. So I think in many cases, you've often got two groups of really skilled, really qualified people coming together, and they've each got their own, really deep areas of expertise. The partnerships that work really well are the partnerships where each partner respects the other's expertise and they create space for the other to add value into that partnership. So that sort of boils down to things that sound really boring. So roles and responsibilities, really clear accountability, and a really clear shared common vision of what does success look like. When we see those sort of things really locked in early on, that's when that collaboration goes really, really well. When people not quite stay in their lane, but they really deliver their part and let the partners bring in their parts as well.
Surely you guys, is that accurate?
Look, I guess from our side, we had some fun throughout the process, Jordan. I think you're right in the sense that as a fintech, we're ready to move. And we wanted things yesterday, and the whole company is aligned to that one goal. So it probably does put a little bit more pressure on things when we're ready to go. So we had some interesting times around contracts and all that type of stuff. But I think overall the experience has been good. But I think to your point, you need to have a different model, right, to be able to interact with the fintechs to be able to satisfy their speed.
Yeah, and I would say that in many cases we feel like the fintech, and in many cases we are the incumbent, right? So in many cases we're moving a little quicker, and in some cases sometimes we're the ones moving a little slower, and we need to look at that model. But it's always a balancing act how we sort of flex, between those things while sort of maintaining what we have as really minimum sort of standards, which every large organisation does. But tailoring that is part of the magic of doing it well.
Natalie, are you guys the fintech in that relationship with Experian, or?
I couldn't help nodding to pretty much everything that Sean was saying about how you want to work together, and I thought it was lovely the way you described why some of the incumbents are slow. Where you get the advantage with the incumbent is you do have a bit more certainty. I mean, we will still die if we don't innovate, but there is that certainty. But we are slower, but we come with a lot of the rigor around having worked in a regulated environment for quite a long time. And those guardrails actually perhaps help fintechs not give them too much rope to hang themselves by. But we need each other, right? We need each other because us slow banks perhaps have that rigor and the experience, but we need the experience. We need the innovation from the fintechs. So as long as we all remain open-minded and want to work together, there's so much opportunity to succeed together, rather than think of it as competing. If you think of it in terms of succeeding together, then and you have that trust in the partnership, I think there's lots that we can do.
Absolutely agree on that point. I guess just to add to it, and it's probably something that both you guys do as well, is having a shared objective. And a lot of the time it's based around the customer or the end client, and making sure that you can deliver for them the right outcome in a timely and like a very timely fashion. Particularly if you're a fintech, you've got a little bit more urgency in some of those regards at times. But one of the things that we found is, and that we talk about internally, is the outdated technology that some of the traditionals have, not all.
Oh no, I think we all have it. That's the
Some
legacy that we sit with. Yeah.
legacy tech is probably in a lot of spaces across the traditionals, right? And being able to that actually leads to poor processes, which can lead to poor customer outcomes. So from our side, if you can get behind the fact that what you're doing is going to deliver a better customer outcome, you just need to kind of work backwards from there to deliver the new tech that's going to get you to the end goal.
And I think there's a lot of foundational stuff that we have to consider there. So our back end will probably, for most banks, be something that's written in COBOL on some mainframe, and we want to now API enable that. But in the past, the access to that was really limited. And so if you now put a nice shiny new microservice on the front and create all these great new innovative channels and front ends, you have to make sure that you secure all of that back end, because suddenly you're opening up something that was closed for a really, very long time and has been protected because it was so closed. So there's all this other consideration. I have to think every day, will this risk our bank license? What's the risk involved in doing this thing? So there's always that balance in the background of yes, we want to innovate, but we need to do it safely and securely, because we're the most trusted bank in Australia. We want to maintain that trust with our customers, and we need to do that by protecting the data that they've entrusted us with. Yeah.
Big ups for mentioning Cobalt on a panel. That's real cool. I'm going to pick on you just for a bit longer, Jordan. You get to see on both sides. You work with both fintech and traditional incumbents. How could they play better to kind of really, what's your advice, or what could they be doing better to kind of really accelerate to that ultimate customer journey, customer experience when it comes to lending?
Yeah, I think the biggest thing, and this probably goes back to, Sean, what you were saying, I think the biggest thing is working together. The best way to do that is for there to be a really clear mutual understanding of what each party's needs are. And those needs might relate to outcomes, they might relate to features, they might relate to timelines. And I think having a really clear understanding of what those are up front, and ideally where possible, making sure that they're understood and agreed by all parties, I think that really helps smooth out the process and ensure there's accountability on both sides. So if one party does commit to something, it's really clear that they're accountable for that over time. I think where things get difficult is where things aren't maybe really well and explicitly communicated. So it's kind of like a relationship. You need to share your needs, right? If you're not sharing your needs, you can't be too unhappy if the other person doesn't respect them. So I think that really explicit and open communication, and just not assuming that the other party is on board, not assuming that the other party will be able to do something in a timeline that you need, or the other party will be able to change so-and-so, or whatever it might be. The more you can say your needs, the more you understand how they can be met.
Yeah, look, I think I generally agree with that. I guess the only point that I'd have to add is around when you're having those open communications, you need to have the same counterpart in the other organization that you're dealing with. So from a lot of lessons are, everyone is a salesperson, and everyone believes that they understand the detail, but you really do need to get the people that have got the detail facing off to the other person that's got the detail in the organization that you're trying to do a deal in, or you're trying to work with. Otherwise, you can waste a lot of time very quickly. And it kind of goes back to governance of partnerships, right? And if advice to anyone out there is, you need to establish that very early on, in terms of getting the right roles and the escalation paths, etc. Otherwise, you can land up in hot water pretty quickly.
I'm going to sneak one in. I think we've got enough time. So we're going to fast forward to 5 years from now. They invited you back on Intersekt. You're going to be on a panel, and you're going to be asked, about, what do you think you'd be talking about in terms of the ultimate, top of the line customer experience when it comes to lending? Like, where is it coming from? What is it? Is it coming from the fintechs? Is it going to be coming from the traditional incumbents? Or will it be this grand collaboration between the two sectors?
Shall I go first?
You can.
I think it's going to come from the fintechs, and I think that it will come, but it will has to come through a collaboration if the incumbents want to survive. So it's collaborate or survive for probably my side of the fence. Otherwise, the fintechs will take it elsewhere. So that's where I think it's going to be. As far as the type of services, I think a lot more of novel type lending. We've probably talked a lot about different business as a service models that are developing now, that you provide the back end and somebody else can just go into your dev portal and develop their own thing at the front. So, there's plenty of that type of lending that's emerging overseas and starting to happen here as well. 5 years down the track, maybe our kids will be, probably you guys don't have kids that old. Maybe my kids will be going for their first home loan, and they'll just be doing a, hey Siri, go sign me up, use all my ID that's already on my phone to verify who I am, and I'll just say how much I want to spend, and I'm done. So who knows?
Yeah, look, it's probably true. Like, hey Siri, I've got a 3.5-year-old, and they know how to use the iPad better than I do. So I think the slightly different angle, 5 years is not that long. Like, if you said 50 years, then, we're talking about getting a home loan, like by saying, hey Siri, in the metaverse somewhere, maybe. But 5 years, I think, in the economic cycle that we're about to approach is going to be, I think what we can hope for is that home loan process itself and the home loan product just maybe takes a bit more of a backseat. And actually the innovation sits more in the wider value chain. So maybe just do something very different, but in the audience, who has a home loan? Can you just put your hands up? Great. Who's had a problem with their home loan, or who's had a problem with buying a property in the past? There's a few. So there's a lot of the other panel sessions that we've had have been talking around some of the issues that are out there in the wider value chain. So making customers' lives easier further up the value chain. So when you're looking to buy, I think there'll be a lot of innovation that kind of tries to seep into that space, and you'll see home loan products becoming more of a commodity, and it will just be a ticket to the game. Like, fast origination is going to become expected. Minutes, this whole 3 weeks to get a home loan is ridiculous. If we can get that to 10 minutes across the board, then I think that's where we should aim for in the next 5 years.
Yeah, I think thinking about the next 5 years is probably more of a hope than a prediction. But I think those trends you're talking about, Sean, in regards to being able to do things faster, quicker, lower friction, I think we're seeing right now things like CDR emerge. And I think there's an opportunity with these sorts of tools. What they're doing is they're sort of shifting that sort of fintech investment Overton window of like what makes sense to do. And I think that unlocks some things that maybe, yesterday or 2 years ago didn't make sense to do from an economic point of view, or unit economic point of view, to support things around inclusion. So you think about, today a consumer who needs a $300 or $400 loan, their options are pretty limited. It's maybe they can BNPL it, maybe they go and get a short-term loan with a really high interest rate, and there's good reasons why they can't go to MoneyPost. I don't think you do $300 loans because the unit economics for someone like a MoneyPost to write that loan don't make sense. Something like a CDR, using all the data sources to deliver services at a much lower cost base will unlock new services that don't exist today. So these people who were previously pushed to the fringes of mainstream finance, and they take that short-term loan, they get that new tyre on their car, they then get excluded from the mainstream system because they have that on their credit history. If those people can be serviced in a more mainstream way, I think that'll really improve that inclusion aspect. So where I hope we are in 5 years is that there's a lot more people who have access to reasonably priced credit, really quickly, And it's being provided by people who are doing it sustainably, profitably, in a way where they're actually doing the responsible lending checks and really taking care of their interests as well.
Thanks. I think 5 years is plenty of time, and we're going to get CDR in 12 months. So it's going to be great. It's open banking. It's going to change the game. And with that, man, guys, it's kind of out of time. I mean, I could talk to you guys all day, but big ups to our really humble and expert panel. Thanks, everyone.
Big thanks to you, Dazzling, Darren, Sean, Jordan, and Natalie. Guys, well done. Continue this conversation over some drinks a little later on. Guys, it's the penultimate panel coming up. Are you ready to rumble? We're going to take on the banks. We're going to challenge them. But before we do that, I've always wanted to do what Ellen did at the Oscars. And let's be honest here, Intersekt is kind of the Oscars for FinTech. So I need you to wave while I take a selfie. Come on, let's see all of you. Woo! Great. We'll see how many million likes I can get on Instagram with that. 10. That'd be great. Do I just keep hitting the button myself, or do I get Elon to organise some bots for me to do it? Okay. As I said, it's our second last panel, and I think it's going to be a pretty good one with some pretty pugilistic panelists. Clayton Howes, come on down. Clayton from MoneyMe. Yeah, that's what I like to hear. Bit of applause. In the red corner, we have Christopher Sazu from Virgin Money Australia. Woohoo! In the blue corner, we have Michael Hendricks from Revolut Australia. In every corner, we have Dom Pim from Up. And finally, Minty Tafesi from RSM Australia is our moderator, our referee, and whatever else she needs to do along the way. One more cheer, one more stamp, one more woohoo! Come on!
Hey.
Thank you, Simon. Hi, everyone. I have here a fantastic panel to discuss with the challenge banks should be aware of when it comes to FinTech. I'll do a very quick introduction. My name is Minty, as Simon said. I work in the international tax and transfer pricing area at RSM. I've got here Chris from Virgin Money, followed by Clayton from MoneyMe, and Michael from Revolut, and of course, Dom from Up. So, should banks worry about FinTech?
Yes.
Yes.
It turned out that the statistics actually supports that. So in preparation to this event, I looked up, the sort of the growth rate in that industry, etc. And globally, it's been growing by 26%, right? So currently, it's around $100 billion market size globally. We're talking about. But within about 6 or 7 years, it's expected to hit the $1 trillion. Similarly, in Australia, it's been growing by about 20% every year, and that's actually data obtained from FinTech Australia. And what they're saying is that back in 2015, it used to be about a $250 million industry. Currently, it's a $4 billion industry. So that's the sort of growth we're seeing. I guess without further ado, I will ask the panels to share with us their experience and wisdom. Chris, I appreciate that you and Don are the ones closer to the bank, as opposed to Clayton and Michael. So a question for you is, do banks face existential threat from FinTech companies?
I think that's going to be a Jekyll and Hyde answer here. I think, so first and foremost, yes, because you should never be insular and think that you can solve everything. But what we also got to recognise is that financial services in Australia is a highly regulated market. And you just need to look at sort of where FinTech has gone over the last sort of 3 or 4 years. And we see, Volt has recently, unfortunately, folded. We've had 86 400 sold into NAB. We had Zinja not be successful. The profitability of Afterpay and the buy now, pay later ones are being questioned. So it's the answer is yes, you should always be fearful of a threat coming from outside, but it's a capital intensive business. And if you're operating outside the capital environment, then can you gain market share if you're not running both deposits and lending? So always be fearful of what's to come, whether it's a small fintech or whether it's big players like an Apple, a Google, or something becoming a fintech. You don't need to be small to be a financial technology firm, but
Short answer is yes.
yes.
All right. Okay. Well, Michael, in light of that, I mean, Revolut is, one of the unicorns of fintech. What is the secret there for it to grow so quickly within such a short period of time?
Yeah, I think there's really three things there. So one is we're focused on an identifiable customer pain point. So Revolut started 7 years ago, and the express aim was our founders identified that consumers were being ripped off on FX margins and international foreign currency transaction fees, and wanted to really hone in on that. And the banks were just not interested in wanting to deal with that. They felt that they were making plenty of money on that. So we launched into that. And consumers got really excited about that. So our proposition is about, we're going to make it better, provide greater value for you, and built out from that. And we actually didn't really see the banks really respond at all, and let us grow there. So that was one, focusing on the customer, focus on a pain point, and then rolling out additional products and features very rapidly. The second thing was, I think, as a fintech, I think we're much more in tune to adapting consumer behaviours. So what we learned there was that the consumer was very open to using an app-based solution to satisfy their financial needs. And so we doubled down on that, and we built everything out as an app going forward. And banks will still try to work through across a whole range of other channels because they're legacy around that. So we've extended from that initial proposition into a whole range of things: stock trading, commodities, etc. And the third thing is the technology. So we started as a fresh organisation. Our co-founders are hands-on CTO, very modern tech stack, able to move very fast, take advantage of everything that's available. And we learnt very quickly that the existing banks just don't have the capability to respond, not just because they have a legacy tech stack, but they have legacy thinking as well. And so we've been able to then rapidly expand, and we now have 22 million customers globally in 7 years.
That's a significant size, 22 million. Don, you have had a couple of startup businesses here in Australia, unlike Revolut that actually came from offshore to the Australian market. What has your experience been in the past, and in terms of challenging the banks? And we understand that you've had partnerships with Adelaide and Bendigo Bank. Can you share with the audience what that journey has been and where you see it going?
Sure. On the first question, I'll just add to what we were saying, is that I think there's not an existential risk. There's a risk, and it might be overstating it to say that, but banks are disrupting themselves as well. Like every major bank in Australia, and most of the mid-tiers, have a strategy to work with fintechs or to have their own venture capital fund or to have their own innovation lab or whatever. So I just wanted to make the point that co-opetition, where we compete but we also collaborate, is probably a bit more of a mantra now than just a pure competitive play between the big banks and the small fintechs, for example. In terms of myself, I've been involved in businesses sort of all over the world, but here in Australia, founded a whole bunch of different businesses, but two that you might know, Ferocia or Up, and then Pin Payments is another one. Actually, both of those businesses wouldn't exist if it wasn't for banks. So in the early days, the banks were our customers, and then at Pin we partnered with NAB in order to do first, it was the first all-in-one payments platform in Australia. So it's like Stripe, but for Australia, before Stripe was here and before Braintree and others were here. And so, Pin was innovating. Basically, the idea was to fix payments in Australia, but to do that, we needed to work with the banks. And then same with Ferocia and Up. Ferocia started out working with two of the major banks and the largest credit union in Australia before we worked with Bendigo. And so there's four banks, two of them big and two of them medium. And we derive revenue from those relationships, but we also help those banks to innovate and build technology. And then we entered a joint venture to create Up, and Up is the best bank in the world. Sorry.
Up's a very good transaction account.
Yeah. So we've got to. They would like to have a bit of rivalry. We've recently announced our home loan product, and to the point about the other Australian neobanks not making it, is that Up is not a big profitable bank, right? We started with transactional and savings products and payment products, and what we've now done is announce the other side of the ledger, and we're going to start generating a margin. And I think we could build, if not the fastest, one of the fastest growing mortgage books in the country. And that gives us the ability to leverage those deposits to create a margin. And what we'd like to do is take Up from being everyone's favourite bank to being the bank that can actually help you buy a home too, and a profitable business. And so I think that is more of a threat to the big banks. And now we're owned by Bendigo Bank, so we'll help Bendigo. They're already number 5, but we can help them maybe make a 5th pillar. Yeah.
Excellent. Lots of exciting stuff there. Clay, to you, in terms of the partnership Dom talked about with the banks, etc. Recently, I actually read an interview you did with the AFR, where you've said that you're actually taking market share from the banks, yet you're also, in the meantime, you're working with them.
All day, every day.
All right. How is it going to work for us, right? We thought FinTech was going.
This is not up, down transactions. I don't know what these guys are talking about. There's an energy. And the consumer, 9 years ago, this 23-year-old wanted something different. This 23-year-old didn't like paperwork, didn't like all those things that we used as marketing campaigns to get them interested in a new way of getting access to credit. That 23-year-old is now a 32-year-old that is the prime bank customer. And they were financially born in the time when a business like MoneyMe was created, providing faster digital services. Now that we have car finance, personal loans, credit cards, that 32-year-old, that generational change has created so much momentum for us. It's not about anything, it's about the power of the consumer and they shift. Now imagine that consumer in another 10 years' time. What's happening with banks and the dismantling of how banks have held this consumer for so long, it's happening, and it's not because of necessarily us. We're at the right time servicing a changing behavior of customers. Okay? Now that's happening. When you think about our business and the ability for us to attract talent, we're winning over technology talent, marketing talent, operational talent that's giving us the advantage to execute with such precise ways that we cannot even imagine a bank trying to replicate. When we launched our blockbuster product, AutoPay, it's one of the fastest fundamental success stories of secured asset finance in Australia. We launched that in 3 months. For a bank to go through a transformational program and to put digital processing, facial recognition, fast payment processing, which they've been doing for 30 years of 8 days. You go into a dealership, the car's available, it takes you 8 days to drive that thing home. On AutoPay, our fastest transaction time for somebody to drive their car was 20 minutes. On average, it's 60 minutes. That's from the time of completion of everything to the point of putting cash in this dealer's bank account for them to go and buy another car that solves for this whole cash drain of society. These inefficiencies are way beyond these smaller increments that we've seen. It's the consumers that are valuing time and time efficiencies that's winning us over. So the energy and the change is happening, and the power of the consumer is what's happening. And so, of course, we're going to disrupt banks because of the consumers driving the change. Now, whilst, my friend over here talks about all these other failed attempts, of course, we're entrepreneurs. We're supposed to not succeed at everything. But go and tell me how many banks have failed internationally and waved the white flag, coming to Australia, waving the white flag and leaving. So there's more of those than there are Zingers and failed vault, kind of businesses. And of course, we feel sorry for how those business models didn't quite make it. But there's equally the number of failures from the big institutions here in Australia. And guess what? Let's take one industry, AutoPay. 2 of our major banks have waved the white flag because their technology is not adequate enough to meet regulators' intentions. Westpac, the largest incumbent in Australia that has owned $16 billion of our money in car finance. Macquarie Bank, both of them last year waved the white flag. So there's as many success stories as there are, non-success stories, and it's not just fintechs that are falling on the wayside of banks. And trust me, that power of that consumer is strong, but the power of the staff is even stronger, because I tell you what right now, these guys, these high-tech talent people would rather go and work in his business and my business than go to some other traditional draconian business that actually can't make a difference. So imagine what 10 years looks like.
Fair enough, excellent points. But I guess, for those of us from the outside looking at, what is stopping the banks from replicating what you're doing? I mean, after all, the vast majority of Australian banks are resourceful, they're large, they're highly profitable. So what is stopping them from replicating what you do? And if they do that, then what is the sort of strategy the fintech companies can adopt in order to remain competitive?
Not to talk about the obvious analogy that we all use, Nokia, complacency, lack of innovation, lack of speed to respond to a changing consumer's behavior. Now they're irrelevant, but they are very relevant because they now provide wholesale infrastructure. If anyone knows telcos, they are incredibly powerful, Nokia, but they don't service the consumer directly. That's gone. Coming back is nearly, nearly impossible. Banks are shifting where they're fundamentally providing wholesale infrastructure to businesses like ours. Society One, which we now part of MoneyMe, we have a bank account. We have a bank account where a consumer can open up digitally, put their money in, get earning savings account. That infrastructure is shifting. We've got access to the same infrastructure that a bank has had with fast payment transactions, bank accounts, and more. So what we're finding in the participation of banks or collaboration with us is this attitude that there's wholesale infrastructure that's fundamentally important to servicing the consumer, and they don't need direct exposure to the consumer. And what's keeping them from being agile is they're the Queen Mary trying to turn and make U-turns in the Sydney Harbour. Like they're not designed to do that. These younger businesses, and we talk about tech, we build microservices technology. They got monolithic technology. Basically, you got spaghetti and you got something really clinical and proven for today's contemporary world. It's very difficult for them to turn that Queen Mary around in the amount of time that's needed. And they got caught sleeping. They got caught sleeping where Revolut's coming hardcore internationally, right?
Yeah, I mean, there's a great case study to have a look at is in Ireland, where, to Clayton's point, a lot of the banks there decided to not invest in retail payment capability and focus a lot more on more wholesale. We went in there with our offering, and we now have 25% market share of retail of the customers in Ireland. And people talk now about when they go to the pub and buy a beer, and they say, "Oh, it's my shout," and the guy goes, "I'll Revolut you later." And we brought, instant free P2P payments to that market because the banks chose not to invest in that. So there are all those examples around, and there's parts of that even exist in the Australian market, and that is primarily driven, to Clayton's point, by that's what the consumer wants, and we provide that solution to them.
Interesting, in one of the sessions I attended earlier, there was a comparison about the UK consumers and the Australian consumers as well as the markets. And one of the observations made was that how the UK market is actually saturated with fintech companies, whereas Australia, it's a growing, opportunistic market. Dawn, if I could bring you to this conversation in terms of, needing to do a lot more with banks from the, the way you started out? Was it the wholesale infrastructure and the likes Clay was discussing that was the attraction for you? And also, if you could comment on how collaborating with them aided the, the creativity, the innovation paths for Up.
Sure. Yeah, look, it's not just Ferocia and Up either. Just by way of example, I think all the points we're making are good and valid, and what it's demonstrating is that it's a very diverse market, and there's no such thing as a bank. There's all sorts of different types of banks. There's franchise banks and there's international banks and domestic banks. So typically, when we're talking about competing with the banks in Australia, we're talking about the big four pillar banks. But if you look at, say, Klarna. Combank as a shareholder. If you look at Afterpay, NAB was a shareholder, and so it's not just my examples. In the market, there's a sort of this mixed entity that's created, and whether it's through wholesale funding, whether it's through access to the payments network, whether it's through funding directly or through a venture capital fund or whatever, I think that level of collaboration, we're going to see more of that. That's sort of, I guess, my prediction. The other thing is banks have some things that most of the fintechs don't have, including Apple and Google and whatever else, and that's the incumbency, and that can be seen as a negative, but it can also be seen as a positive. So, we're part of Bendigo Bank now, and part of the acquisition was to keep Ferocia and Up separate from the rest of the organisation, a lot for cultural reasons and a lot for process reasons, but so that we can continue to innovate. So I think that's fine, but we're very proud of being part of the group because Bendigo does a lot of social good. And so over the last 25 years, they've provided more than $300 million back into local communities in Australia. And I think that's something that most fintechs don't have the scale to be able to do yet, right? So I actually think that this combination sort of, I call, co-opetition or collaboration is actually going to be an important part of the landscape. And it's not just Australia, we're seeing it happen, overseas as well. So to me, I think that's just a few examples to illustrate the point that it's not my own lived experience, that's part of it. It's also the failures that I've been involved in along the way. So I've not just been involved in successes, but also failures. And I think that's sort of made us what we are today and have that tenacity and sort of, pushing through to become successful. But I do see that trend with more banks working with fintechs rather than directly competing against them.
Thank you, Do. I guess, Chris, to bring you back to this conversation, is Virgin Money looking at partnering with fintechs? And what's the sort of the strategy in terms of collaboration and et cetera?
I mean, so absolutely we are. And in fact, one of the fintech success stories in Australia has been Frollo and what Frollo has done. And we were actually one of the first parties to partner with Frollo. We did that back in 2019. And they've been part of the foundation of what we've been building in terms of the digital bank and the digital transformation for BOQ. So absolutely, we look at the fintech market. I mean, we consider ourselves a challenger into the big four, much as what Dom has said, and we all see that prize of taking market share away from the big boys and using our proposition and our technology to do so. And fintechs are an opportunity in that. As we say, they're a hotbed for innovation. People always come up with better things than what you do, and if you close your eyes to that, then you miss the opportunity. So, of course, our door's always open to talk to fintechs to see how we can collaborate and how we can deliver a fantastic proposition to customer. And I think that's ultimately where you got to start, right? What is your proposition?
So I guess going to a related topic, where do you see the Australian fintech sitting from the global fintech industry perspective?
You're looking at me?
Yes.
You're looking at me? Look, there's no doubt that one of the things that's a bit different in Australia versus, say, where Revolut's based in the UK is, the venture capital market and the ability to raise the necessary funds to do that. So, being based in London, we were able to access, broader range of capital markets, and we've been quite good in getting our timing right in raising some of those. So we're well capitalised, and I think that will continue to be a challenge in this market. And we've publicly said if the circumstances are right, we want to get a bank license. And if you move into that part, which Dom will know all too well around it, the capital requirements around supporting a bank license are pretty heavy. And so I think that will continue to be challenging for any fintechs that have any aspirations in that space around the access to the necessary capital to do that. But outside of that, I mean, the technology now is it's a global marketplace, and people can access that and access talent when necessary to do that.
If I can just jump in, make a comment. I try to get involved in different fintechs all around the world. But in the US, for example, I think Cash App would be the largest, fastest growing sort of financial services company in the world. It's built in Melbourne. It's not available in Australia. So I think there's one question is the international opportunity. The other is leveraging the talent in Australia to be able to export that to the world. And we can make use of it ourselves at our local banks or in our local fintech industry, but we can also help to create that innovation and that spark and that disruption globally. We don't just have to limit ourselves to thinking about doing it locally.
We spent over 400,000 developers' hours to build a platform called Horizon. 400,000 developers' hours is no joke. What we created here is exceptional. The ability to process all forms of transactions, NPP is easy, decisioning for credit's easy, secured asset finance is easy, reaching customers digitally is easy. We're now close to our 1 millionth customer. But 400,000 developers' hours, and the banks are still yet to start their transformation programs. That's a long lead time that we've got an advantage over. So when you think about what is fintech in the future, it's the power of technology and the consumer changing behavior that's going to really be a catalyst for us. I'm excited. I think in 10 years' time, it's going to be called the Big Five. And I'm pretty sure MoneyMe is one of those Big Five. And it will be surprising to see if those top four are still in there.
10 years.
I just want to add to that. Technology is always, we've been a technology company, a software company. That's what we did when we created it. And, one of the things we did was we spun out a business from our company, from PIN actually, which helps other businesses to deploy software to customers. And so Ferocia was actually the first paying customer of that service. And now we deploy software on average more than 10 times a day to customers. And very few companies in the world actually do that in any industry. And so to be able to do that in the financial services industry, I think is really exciting. Upsiders look forward to all these new things that happen in their app all the time, and we're able to deliver that. That is very difficult for the big incumbents to do, and we've worked with several of them to help them with that transition, to be able to create that infrastructure, improve their culture, change their processes in order to be able to compete in that space. But for the time being, most people in this room that are in fintechs have a competitive advantage for sure.
Our first customer was a Commonwealth Bank employee, and he was 23 years old. And I asked, because this was our first customer, why did you choose MoneyMe? He said, the bank will take too long for me to get access to capital, and I've got going away on holiday, and this was just pre-Christmas. That was our first customer, a Commonwealth Bank employee that's got all the access and tools, choosing something different. That 23-year-old is now 32-year-olds. And they were even the Commonwealth Bank's employees choosing an alternative solution. That hasn't changed in anything. It's just gaining momentum. And there's lots more space for more names. And we're not all going to make it. But the ones that can get to critical scale in the right time, those are seriously formidable businesses that are going to take market share from some of the banks.
Thank you very much. I mean, this is a topic we would have needed half a day, not half an hour, Simon. But we're running out of time. But before we conclude, can I ask each member of the panel to share with the audience a takeaway message, in particular for fintech companies out there, because you have such depth, knowledge, experience, and wisdom. What is one thing you would like to say to them?
I'll just start. I might just have a fact and then some insight. So the fact is that it's 80% of the market is the big four banks. So whatever you're doing as a fintech, you're going to be winning business from the big four banks, right? It's just a fact. So it's not so much a sort of a nasty relationship or anything like that. It's just a fact. The second point is the talent that I've talked about. In Australia, we have an enormous amount of technology and engineering talent, and I think that we should work with the universities, we should work with the fintechs, we should work with industry organisations and leverage that talent, because that talent is what builds the unicorns of the future.
Yeah, 100%. I mean, that 80% comment is so pertinent. I don't know, we spend a lot of time when we're working what we do, and people say, oh, look at Money Me, what they might be doing or what Up's doing. We say focus is the big four have 80% of the market by any definition. That's where we will win most of our customers from. Stay focused on that. And that's actually something that we do nearly every day. I think the point I made earlier is just if you have a obsessive focus on solving a customer pain point and having a point of difference, so we called it taking our core proposition and winning a beachhead in Australia that we could win, land, and then expand from that. Stay focused on that and do that, because fintechs have the ability to pivot around and come back to it. So, I joined Revolut in January 2020, really excited to launch a financial services business in Australia, and then a pandemic hit. And the last thing people are worried about is some of the financial services things. So we had to pivot very quickly and then come back and focus on other things, but then come back. So, if you're a fintech in that business in Australia today, you take all of those lessons, you're nimble, you're focused on your customers, you can move fast, just concentrate on those things.
Agility is the word. Clay.
You don't need to go public. It's a horrible experience. There's now capital markets that will reward you being private. 4 years ago, that didn't exist. We had family offices really tightly held here. Unless you had scale and proven track record, which we don't have, when we're early entrepreneurs. The capital markets today have shifted the other way. The venture capital, the private equity capital, the enthusiasm to invest in fintech is huge. Don't be frightened by public markets. I warn you, don't go to public markets just yet, because they don't discriminate. They don't discriminate whether you're flying or whether you're traditional. They just don't discriminate at this stage. So stay true to what the guys are saying, which is the focus being participating in a monster ecosystem. But the availability of capital for anyone starting now, you are light years ahead of where some of us started 9 years ago, where it was very difficult. Your bootstrap is very different now, and there's a lot of capital for you to actually accelerate and get quick advantages, because businesses like ours are succeeding, and now they want to participate. So I'm very encouraged about what happens now, and that is the entrepreneurs here, and there's some private entrepreneurs here in the audience that we know and have seen the early stages. Proviso, bank. You guys remember bankstatements.com.au, where banks and everyone else was trying to shut this crew down, a small Adelaide group doing great things for the consumer. They're trying to shut them down, but guess what happened? All the banks started using it, and they changed their name. Now they all use bankstatements.com.au. Ilion bought them. The participation and the success stories are far greater than some of those failures.
Chris, the last word.
I mean, I'm going to go back to what someone else said before, which is focus on the customer. You can have the best technology in the world, but you got a shit customer proposition, and you're not going to make a cent. And so focus on the customer, back that up with good technology, and you're on a winner.
Excellent. Thank you very much.
Thank you,
and yes, please do join me in thanking the panel members.
Thank you to Clayton, Christopher, Michael, and of course, Minty and Dom. Whoa, wow, that was pretty punchy, wasn't it? Sticking it. Talking trash. When we have the undisputed heavyweight champion of Australian financial services in the room, Ethan Tees, the Executive General Manager of Payments at the Commonwealth Bank. He's up next. It is our last session. Guys, have you had a great 2 days? Is Rehan here somewhere? Where is he? And the team? Yeah, he's outside working the room. What do you reckon? Do we do it at Rod Laver Arena next year and we just put everyone in the round and you can all get a corporate box? Well, it is our final session. It'll be interesting to see how this one goes because, of course, Ethan wears a couple of different hats, and Simone, who is our moderator, interviewer, collaborator, I think, in this instance, is of course, the CEO of Paper Plane, which is a bank-grade payments overlay service she co-founded in early 2018. She joined the board of FinTech Australia back in 2019, has been the chair of FinTech Australia since 2020, and also leads the payment working group here at FinTech Australia, as well as sitting on multiple advisory boards and bodies. She was recognised as the Outstanding FinTech Leader of the Year at the Finnies and, of course, the Paris FinTech Forum FinTech Award in 2020. Lord Mayor loves her. She is a die-hard Tigers fan as well. I won't hold that against her. That's fine. Ethan Tees, as I mentioned, is the EGM of payments at CBA and is responsible for the domestic and international account-based payments products. He does a bunch of stuff, but one of his other jobs actually is he serves on the board of Swift, a Paper Plane. So this is a chance for the CEO and founder to interview a board member. This should be an interesting conversation. And I think if you put up a couple of lobs he's allowed to smash against that previous panel, that would be acceptable. Ladies and gentlemen, come on. It's the last panel of the day. It's been a big 2 days. I want to hear the hooping, the yelling, and the cheering. Come on, bring it home. Simone and Ethan.
Well, that was the hype man we never asked for. Thanks, Simon. Okay, last session of the day, and I know that we are standing in the way of drinks at the Garden State. So we'll try to make it as interesting as we possibly can. And I'm going to start off, Ethan, by asking you, what is EGM of payments at CBA?
Yeah, it's a really good question. And I feel really bad trying to follow the prior session.
I know, it's quite the lead in.
The hype, like I don't think I could even come close. But it's kind of a pretentious title, and I think for this crowd it probably is too, because payments I think touches everything, and we've been talking about it the past couple of days. So I do have, as described, some product responsibilities for the account payments. So basically everything non-card, and then I have responsibility to bring together our strategy for payments and a representation and advocacy. So it's a connecting role in the bank with some real kind of with 25 products, right? So really the workhorse products for us.
It's the second time we've heard mention to an overarching payment strategy at Intersekt, but we won't touch on the other one. That's yet to come. So look, Dom quoted a fact at the last panel that 80% of market share for loans is with banks. Another fact is that we really need banks for a thriving payments ecosystem. They're a big cornerstone of that. But that ecosystem, we're really on the brink of change. We've got CDR, we've got potential action initiation with payments coming, we've got a strategic payments plan, we've got payments licensing, we've got RBA thinking about common access requirements. What is the role of a bank like CBA in that ecosystem?
Yeah, it's a big question. And in many ways, I think we're going to play, if we do it right, all the roles. I mean, today we play kind of all the roles, right? And as the payments ecosystems open up and continues to open up, we know we're going to be relied on. That's number one. Number two, we've got a track record of partnering, right? We're partnering with Paper Plane, a number of other fintechs at CBA, and that's really important to us as partnering. And number three, we're going to be innovating ourselves, right? And so if we get it right, we'll do all three of those things in the future, just like we do today. Now, what that's going to take is having the right foundations. And I think there's been a lot of productive conversation here today. We're all eagerly awaiting a number of consultations and papers from the government on what the future is going to look like exactly. And if we get the foundations right, then we can build on that. We can know exactly what it means to be relied on. The ecosystem partners can know about that too, right?
Are you saying that consumers, businesses, and partners, fintechs, other providers need to rely on you?
Yeah, absolutely. Everybody.
Everybody.
In a way. But I think the key here is for that all to come together, having the right frameworks, getting those rather quickly, and having the right level of coordination will mean that we can play those roles in a strong way and continue to be an important part of the system.
Almost like a hub of the ecosystem.
Maybe.
Okay. All right. So there's been a bit of chat about payments becoming a commodity or already being a commodity. Do you think that's right? Do you think that business models need to evolve? How are we going to win with the economics of payments going forward?
Yeah, I think this word commodity and this idea of efficiency, it's important, but at the same time, it's not fair, I think, to paint all of the payments, all the transactions, experiences with that same brush, right? So it's not always about cost, but it is always about value. And sometimes that value is going to manifest by commoditizing some things that are common, and then those things should fall in cost, especially if there's a lot of access. On the other hand, if we can bring more value, right, with the enhanced data payloads and all the experiences we can build on that with the overall ecosystem, well, then that's going to be a different story. And we can bring that value to the entire experience where there might be other costs outside of the payment leg and actually have a rebalancing of economics. So it could go any way. Some will be commodities, some will be high value, I think is the real answer in this.
Do you think we need to get better at communicating what the value is, though? Because ultimately, it's often a business that pays the underlying price for a payment. There's not a lot of scenarios where a consumer pays for the payment that they're doing. Do you think we need to get better at communicating what the value is?
Yeah, I mean, I think for businesses, it's pretty easy. They get it, and they see value. You can help them find value. That's sometimes a challenge. I think for consumers and some of the other players and stakeholders, it's not always obvious how the payments ecosystem hangs together and how the value really underpins that. And with all these new experiences, I think there's going to be a risk that we don't see the value and we don't understand how to engineer it to ensure that value sustains and that all parties are rowing in the same direction.
I have likened pay to and direct debits to the old analog TVs switching to digital TV, and there was, a holdout group that no matter how well the benefits of digital TV were communicated, they didn't know it until they got it and were forced to get it. So, I think we will get there eventually. We'll be forcing the latecomers to switch over. One thing that we haven't talked about a lot at this conference this year is mobile wallets. How do you think about them in the view of the ecosystem?
Yeah, can I stop and cover your analogy first? I think it's really
Sure.
good.
Okay.
Because we've been debating the pay to analogies, and I'm sure there's some people in the room who have better analogies than me, maybe even than you. And I liken it to the mail, right? So you send a postal letter. This is kind of direct debit, right? And you don't know exactly when it's going to arrive, if it's going to arrive, and in what shape it'll be when it gets there, right? And with Pay 2, it's more like instant messaging where, you have a feedback loop. It closes the loop and you understand what's happening. You have control in the moment. It's real time. It's pretty exciting. So I wanted to try that on with you.
That is a good
analogy.
Right. And I think we need then Meg Ryan to come and do a movie to promote Pay 2. Do you remember You Got Mail?
Yeah.
Yeah. All right.
So on mobile wallets, I actually think it's more of the same, right? As we think about, and I didn't hear it in the conference as much, and I admittedly didn't make every session, but there was a lot of talk on CDR, of course, and there was a lot of talk on Pay 2 and NPP and general opening of the payment system. But the mobile wallets are increasingly popular. There are different dynamics there. And I think it's just like everything else. We have to make sure that we've got the same frameworks and standards. The idea of openness and access is important. And we know that the ACCC and the RBA are looking into this. And I think the important thing is there's a lot of talk about the NFC today, right? That's part of the mobile wallet conversation. But technology will move on. There'll be the next thing. And we already know that, still in the NFC, but not mobile wallets, phone payment acceptance is going to be one of the areas. And I'm sure it's already being looked at. But it's kind of what's next. Because I think the challenge we've had and the challenge we face now is there's been so much change, we're catching up. We have to see how far forward we can build the ecosystem.
So looking forward, we've just come through quite a transformational build of a new piece of infrastructure, or well, certainly a piece of infrastructure on top of an infrastructure, so Pay 2. Is there anything that you think we should go, well, we learnt this at this time about creating this cross-industry, cross-ecosystem development that we could carry with us as we go into the next exciting development, whatever that might be?
Yeah. Before we get to learning, first of all, it's pretty exciting, right? We are now approaching Pay 2. We can see the light at the end of the tunnel. It's getting brighter and brighter. This is pretty exciting times. And CBA is pretty proud to be part of the NPP from the start, right? We did a big build to get to the first transaction in 2018, and there's been another big build for Pay 2, and we know there's more to come, right? And so that's for us. I'm just delighted that we're going to be the first major to Pay 2. Now, in terms of learnings, I think there are a lot, right? And one of them is that these new things, which are ambitious and exciting, are hard. I think we all know that everyone was supposed to be live a couple months ago, number one. And then number two, like the importance of coordination is really critical. So we think about, we were talking about the Treasury strategic plan yesterday and the ability to unlock greater coordination so we have greater certainty around when we can arrive. Pay 2 is going to get there. It's going to be great. And we think it's going to be good out the block, but it's going to be really great when we've got 80, 90, 100% reach, right? And of course, we would have liked to all land at the same time. So coordination is one, and then context is the other, right? And I think that they work together and that there's the context of what else we're being asked to do as an ecosystem, what else we want to do, but also the global context of what's happening elsewhere and what we can learn from. You look to the UK and you look to India, and there's been great success in both markets, but they're both revisiting some of the foundations today. And so can we accelerate that and actually get the foundations right really early in our journey, as opposed to kind of revisiting those foundations around, pricing and cost, right? You talked about commodity. A commodity is priced on the cost. So you have to get the cost dead right. These other markets are starting to look at this and reopen it. In the Netherlands, ideal, I think they got that from day one. And here, it's a work in progress. So that's probably another learning, is just getting the context right, both in terms of what else is going on and what else is happening around the world.
And maybe the payment strategy will help to crystallize some of that for what might come next and come down the track.
Yeah.
So thinking about what's around the world, how do you think we are placed today, exactly where we are, and then thinking about where we'll be this time next year? How competitive are we as a future-facing, digital-enabled economy from a payments perspective? Are we leading the pack? Are we mid-pack? Are we...
When I hear that question and I think about where we are today in Australia, there's a lot of potential. So I think we're at the precipice. We could be leading the pack and could be like a real inspiration to a lot of other markets. Right now, we've got some really bright spots. I think Tap and Pay is a very big bright spot. Our overall digitization of money is a very big bright spot. And all in all, we've had a really safe and stable system to date. But if we get the next couple chapters right, I think there'll be a lot that other markets can learn from us.
Do you think that our legacy systems are holding us back in some way?
Yeah, it's a really interesting question. And, we've got these legacy systems. They don't intrinsically hold us back. I think that's pretty unfair. What could hold us back in the legacy systems is if we seek to drag them into the future and have some of the same functionality, requirements, levels of investment in legacy that we've had in the new systems. Because then we're going to crowd out investment for innovation, for the next chapter of foundations, for all the exciting things we were talking about. So they don't hold us back, but they could.
someone said to me not so long ago, a couple of weeks back, that, oh, there's nothing wrong with our legacy systems. They're not broken. That's not the point. It doesn't mean that they're fit for purpose for carrying us forward into, an always-on digital economy that we need to be. But do you think also that understanding what the true cost of those systems are, to your point about investing resources into them, do you think that that is as exposed as it should be in order to create that motivation to really drive behind the new systems?
Yeah, I think it comes back to coordination again. So we think about they're not broken. That's for sure. But we don't know what good feels like until you've got it. I think like none of us bubbling around in the 90s with a flip phone would have said, this is broken. We would have said, this is amazing. It's a flip phone.
I broke mine a lot.
Yeah. Yeah. Well, yeah. I'm in that club as well. But we didn't know what was next, right? And then once you start experiencing it, you need it, right? And I think with real-time payments, we've got that. I think the control and the other benefits that we're going to see in some of the innovations like Pay2 are going to be similar. And then it's a matter of coordination on the legacy systems. Like, what do we do to make sure that we've got, a good glide path for the ecosystem?
Yeah, okay, all right. So this time next year, if we're sitting back on this stage, what should we be talking about?
This is a bit of a curveball.
Sorry.
Next year, well, we'll certainly be talking about adoption of Pay2, because by this time next year, hopefully we'll be at that 90% reach. And we can really have some incredible learnings from that. Behaviorally, I'm excited to see what happens. I'm excited to see all the innovation on top of the functionality. I think we've all got use cases in mind now, but once it goes live, we're going to start to learn and see new use cases. It'll be really cool. And then at that point, it'll be a good opportunity for us to say, okay, we're learning about these third-party payments, opening of the payments ecosystem. What does that mean for CDR, right? And I think that could be really interesting to have those learnings and understand what's happening on Pay2 and feed that in to the dialogue at that time. That'll be a cool conversation.
And just in case anyone's wondering, in the next few weeks, what's your favorite ice cream flavor?
I'm prone to pistachio, but never in a cone, always in a cup.
Never in a cone. Okay. All right. That's it, everyone. That is the last session of the day. Simon is making his way back up here. Thank you, Ethan. Thank you very much.
Thank you very much.
You're obviously keen for a drink, Simone, but do we have any questions from the floor? Here's your chance to grill a CBA executive. Doesn't happen very often. They've all gone shy on us. Ethan,
this is the penalty for going fast, right?
Yeah, totally. Yeah, moving very, very quickly. That was the Pay2 of panels, delivered instantly. Well done. Thank you. I'm so glad after 2 days you're still laughing at my jokes. If I can get a reference from you, I will show it to my children so that they perhaps appreciate my dad humour. I got a dad joke T-shirt for Father's Day. Right here, right now? Okay. Well, I'm not sure either, but we'll just keep. Okay. Should we do it? Let's do it. Rand he's not here anymore, so we can say whatever we like about him.
We're just debating about whether it's time to do the closing thing or not.
I think everyone is quite keen to get to the drinks, which has been the hottest ticket in town. I hear they are selling on the dark web for a little bit more than a Bitcoin. So, let's do it. All right, ladies and gentlemen, the chair of FinTech Australia, Simone Joyce.
Thank you, Simon. Okay, this is the first time I've ever had to do the closing for Intersekt, because normally I am on a plane back home right now, but this year I decided to stay and do it. So over the last 2 days, we have talked about payments, Pay2, CDR, CBDCs, blockchain, funding, loans, banks, self-disruptions, cross-pollination, consumers, businesses, and a whole lot more. But the very best thing is we talk to each other. And that is actually one of the things that Intersekt is most renowned for. And for that, I want to say thank you to everybody here and out there who is currently talking to each other. We are an energised, motivated, engaged, intelligent and impressive community of people. And every day you brought that energy to roundtables, panels, coffee, breakfast, dinners, lunch and drinks. So thank you very much. I also want to say thank you to Simon Thompson, for his masterful emceeing and his masterful jokes. A big thank you to Rehan. Rehan, there you are, up the back. I don't know how you're still going. You have done us all extremely proud, and on behalf of the board and the entire FinTech community member base, I want to say how grateful we are for putting this on. Also for the team at FA, you're a small team, but you are so impressive. Lisa, Stu, Anita, Carlo, Nick. Have I missed anyone? Let me check. Stu, Carlo, Nick, and Harrison. Thank you. You're a highly effective and impressive team. Yay, they're not in here, they're out there working. I wanted to take a quick opportunity to remind everyone that Rehan opened this conference by announcing that the board of FinTech Australia and the team have all taken the banking and finance oath. And the reason we did that is we have a commitment that FA, FinTech Australia, should be an organisation that supports fintechs to go forward and do good for our environment, do good for our society. And by taking that oath, we can start to create that foundation of support. And that's a really important thing to acknowledge at this time, because we are facing a period that isn't as sunny as when we closed Intersekt last year. I don't think we'll be going into a lockdown as we did after Intersekt last year, but it is a tough time for fintechs. But luckily we thrive on tough times. No one starts a fintech for an easy life. So I have no doubt that we will continue to thrive and survive as a community, and that next year we will have a lot more exciting things to talk about. A reminder also to book your tickets early for Intersekt next year, because we did sell out and we had about 300 people on the wait list this year. So watch your inbox for those early bird sales. And that is it. Thank you, everyone. Let's go to the garden stage.